Hey there, welcome back to the channel on this beautiful weekend. Hope you are enjoying it. Buckle up because today we're diving into NIO's upcoming earnings report. That's all set to drop on Tuesday, September 2nd, before the market opens. Now let's take a look at what analysts are expecting for Q2 of 2025. Analysts are predicting NIO will report a loss of 30 cents per share, but here's the twist. Revenue is expected to rise to a hefty $20.07 billion for the quarter. That's a 14.2% increase compared to the same period last year, where revenue was $17.45 billion. Pretty solid, right? NIO had already given us a bit of a heads up back in June 2025, with their revenue guidance, which was projected to fall between 19.51 billion Chinese yuan and 20.07 billion Chinese yuan. Looks like they're on track, but hold on, there's more. According to the analysts over at LSEG, the average estimate for NIO's loss per share sits at 2.22 Chinese yuan. But despite the loss, investors aren't exactly running for the hills. Quite the opposite, in fact. Out of all the analysts covering NIO, 12 have rated it as a strong buy or buy, 11 have put it at a hold, and just one has tagged it with a sell or strong sell. So clearly, people are still bullish on NIO's future. Now let's talk about Wall Street's price target for NIO. The median 12-month price target is sitting at $7.50. That's a solid 82% increase from where the stock was just 6 months ago at $4.10 per share. Now that's some serious upside potential if you're thinking about the long haul. And here's an interesting nugget. Hedge funds have been making some big moves recently. For example, UBS Asset Management made waves by lifting its holdings in NIO by an eye-popping 3,966.7%. during Q1, nearly 4,000%. That's a pretty strong vote of confidence in NIO's future prospects.